Welcome everybody from the Wall Street Silver community. We have an incredibly special guest, Bill Fleckenstein. Bill, how are you doing today, sir?
I'm fine, thank you. How are you guys?
We're very excited here to have you.
Well,
We also have Lee Justo here from the Wall Street Silver community. Lee, you want to start it off by asking Bill some beautiful questions?
sure. Well, why don't we first give an introduction to who Bill is?
Yes, sir.
I actually started following Bill in the late 1990s during the internet bubble. I would see him on CNBC, and he was like one of the few contrarians on the websites. I mean, on the TV at that time, basically a bear on the markets, and he was pushing silver. I remember you had written an article. You were pounding the table on silver, saying it was like the most undervalued asset in so long, and also you were a proponent of Pan American silver. Now, right now, you're with Fleckenstein Capital, and are you still doing the Endgame podcast as well?
Yeah, but we
Okay,
do it sort of sporadically.
Okay. Is there anything I missed about you that you'd like the world to know?
No, not that it doesn't really matter that much. I mean, I've been writing a column, daily column since 1995, and I still do to this day. And it's not a blog, you have to pay for it, but it's pretty cheap. It's $120 a year. I write a column and I answer questions. So if anyone cares about that, they can find me at fleckensteincapital.com. But other than that, the other stuff will come out or not. It doesn't really matter.
So going back to the 1990s when you were a bear and you were very bullish on precious metals, you were going on CNBC at the time, I'm sure other venues. Are you seeing a similar kind of state of affairs now with the markets where you're seeing it differently than the masses are?
Well, the latter statement is probably true of me seeing it different than the masses, but the two environments are radically different. There are elements of some of the same things. There are elements of the speculation we saw in 1999 in the stock market. There are elements of the speculation that we saw in 2007 and 8 in the way people are behaving about XYZ can only go up, the way they thought about house prices. There are elements of what happened in the late 60s where anything with the name Onyx in it was popular, and we had the Nifty 50 develop. We've got a variation of that. There are elements of 29 where you've got folks that are speculating way beyond what the type of thing they ought to be doing, similar to the bucket shops of what happened in 29 and margin debt. And then there's elements of what happened in 89 in Tokyo with the massive movement we can see very large moves in very big companies. It has to do with some of the thinness that's been created by passive investing and other things. So there are all of the worst speculative issues of the prior biggest peaks of, say, the last 100 years all happening at once. But what was different about those periods is as we were in them and as the mania was cresting, the central banks were to some degree withdrawing the liquidity that they had put in, too much liquidity that had caused the bubble, but they were at least taking some out, not because they really thought anything bad was happening or that they had done anything wrong, simply because they had a tiny amount of common sense and realized, well, if we're going to do this, this is what we do. We put it in, we take it back. And that's what they did then. They're not doing that anymore.
No.
They started QE. That's when I shut down my short fund in the beginning of 2009 after doing well in 2008. And because I thought QE would make it very difficult to make money being short, because how the Fed behaves was a big part of how I ran the tactics of my short portfolio. So you've got a situation now where the Fed has said, we are not even going to thinking about withdrawing the liquidity until such time as, for sure, inflation has run over 2%, and probably for a fair amount of time, particularly if we haven't created enough of the right kind of job growth that we want.
Mm-hmm.
So they are going to make a mistake in all likelihood of having created way too much liquidity, and we're going to get some inflation. I felt that the liquidity problems in 99, the excess liquidity would lead to some inflationary consequences, they didn't really happen, but I knew for sure the bubble was going to burst. And in that environment, people would have to kind of sober up. And I thought that, and it wasn't really until the Fed decided that they weren't going to take the medicine and they were going to start printing money again, that's when the metals took off in early 2000. Okay.
Sure, yeah.
So my original thought was those policies would create more inflation than they did. But the fact that we wouldn't take the medicine led us down this path to where now we can never take the medicine. Rates will be at zero or negative forever until the bond market says enough. We're not going to buy, the bond market says we're not going to buy bonds at 5-7 years and longer at these silly coupons because of what you're doing. Now, that's my theory. We haven't gotten to that point yet. But in the interim, we're going to see more inflation in all likelihood. We should start to see the impacts of the bottlenecks and the shortages, some of which were caused by the virus and those disruptions, and others have been caused by just the consequences of the monetary and fiscal policy. And so that we have probably, we're going into, and I think we're already in a period that ought to be about as beneficial for precious metals, or said differently, you'll need precious metals to protect yourself from what's coming. Now, the Bitcoin crowd think that Bitcoin will do the job better than precious metals, and we don't have to debate that topic here. The principles are similar as to why I want protection. So the Bitcoin crowd and the precious metals crowd agree on the premise. How best to do that is where people differ. I have no problem with anybody who wants to mess around with those things. I don't in particular, because I know I won't be able to handle any wicked drawdowns that come along, because I will be worried that they might be associated with something bad that's out there that we can't see. And I can handle that mess better with precious metals. So that's what works for me. That's a long answer to your question, but that's where we are.
That was a really good answer. Now, Bill, what's your prediction date, if you have one, for the collapse of the US dollar?
I don't have a collapse of the US dollar on my radar. It is almost impossible for the dollar to collapse when all the other central banks are doing things just as crazy. So, I mean, who's to say the yen's worse, or maybe it's better, or maybe the euro? I could construct an argument about why either one of those is better, and I could construct an argument why either one is worse. So when the major currencies of the world are all engaged in the same sorts of debasement to one degree or another, it's hard to have a currency crisis. That's why I say in the end, I think the bond market is where the revolt against these policies are going to be. And for all the millennials and younger people out there, what you ought to hope for is that somebody stops this can kicking that is precipitated by the politicians, of course, because that's all they do, and the central banks. We're not settling up any problems. And if we print enough money that your 401k makes you think you're rich, but the price of everything is radically higher over time, you haven't really gotten ahead. So when I was bearish in 99 and 99, I thought when the bubble burst, everyone would sober up and we'd pursue sane policies. The exact opposite has occurred, and its exact opposite has occurred at every juncture since then. And now we have no options. The Fed's trapped. They can't tighten. They talk a good game. They say, okay, we have inflation and we don't like it and it gets too high, we'll tighten. Right. Watch what happens. Maybe the bond market hangs in there for 5 minutes, but the stock market will collapse. And so will the economy, because it's tied to the stock market, because the stock market's been the engine of the economy since we started QE. So, and it was similar to that in the bubbles. So.
No. Go ahead. I'm sorry.
No, that's fine.
No, we had spoken on the phone a couple of days ago, and you said that you wanted to talk about the manipulation of the price of precious metals in the market, and you were not in the camp that you believe that they are manipulated. A lot of the people in our community are. We actually will be interviewing GATA, I think, tomorrow. So I'm really curious to hear your perspective on things.
Okay, I think I thought at one time that precious metals were manipulated. And look, a lot of these macro things and stocks too get manipulated. If people think they can push prices around or front run or do what you want, They will do it. We've seen it in LIBOR. We've seen it in precious metals. We've seen it, it goes both ways. They push them up, they push them down. And it happens in other markets. It happens in stocks. So market manipulation is supposed to be illegal, but the SEC doesn't really care about that. The SEC doesn't really care about much of anything. So we have manipulation, but it is not the systematic attempt on the part of the government or the COMEX or the bullion banks to suppress the price. I listened to that argument as silver went from 4 to 48 or 3 to 48 from 2001 to 2011 or 12. Whoever was supposedly doing it didn't do a very good job, but that didn't stop people from saying it was continuing to happen. And, you don't have unlimited amounts of money. If it goes from 44 to 48 and you were trying to suppress it every step of the way or at certain steps along the way, guess what? You're bust. The government doesn't care enough to suppress it. The Fed doesn't care enough. They barely pay lip service to it. Bernanke couldn't even spell gold. Jay Powell knows what it is, but they don't really care. Why would they manipulate something they don't care about? They care about themselves. They believe they are the answer to everything, and they're not going to let some stupid ass, prehistoric rock decide what they're supposed to do. That's the way they think. They believe their models. They're never right. They're never right, but that doesn't stop them. The problem with thinking that it's manipulated is if it's manipulated and it's stacked against you, why do you want to take that on as an individual? You can think you can get together as a group and maybe that would work. But the fact of the matter is, along the way, I became a director of Pan American Silver because I learned a lot about silver. I became friends with a fellow who was the biggest local on the COMEX. I became friends with friends of his who were market makers at JP Morgan, AIG, Goldman Sachs. Those were the big bullion. And there was Makata Metals. There are other bullion banks, but the bullion banks exist for a reason. People sometimes think, well, if I don't like the price and I'm a Pan American Silver, I shouldn't sell it. Well, they're running a business. The business is find the stuff, pull it out of the ground as cheaply as possible, sell it, try to get a good price, don't try to get a bad price. But that's what they do. They have bills to pay. You can't just hold up your sales because you don't like the price. And so when you're selling it, you have to sell to someone. You call up XYZ Bullion Bank and say, we got this to sell. They have regular sell programs. And that day, the bullion customer doesn't have a buyer. So he takes delivery. He has to protect himself. So he sells futures. They operate in the futures market because they're operating in the physical market and they're trying to hedge their book. They're not in the business of saying, okay, we'll take price risk all day long. They're in the business of making the margin, okay? That's what they do. The environment couldn't work without the bullion banks that everybody hates. Now, that's not to say that some guys don't get a view because they got a good view of the market and they don't push the market. They do. They've been caught at that. But for people that think that it's just one giant rig job and goes against them, and I see these people yap about the bullion banks all the time, and it drives me crazy because they don't understand how it works. You have to have these people. So to think that there is an epic squeeze because you're going to catch the COMEX bad guys or the bullion banks, that's not going to happen. Having said that, silver is a small market. And when the time comes that enough people decide, hey, I would like to use silver to protect myself from the monetary debasement and the inflationary consequences and the future bad policies, and enough people decide to buy silver at the margin, you will have a dramatic effect because it's a small market. Yep. But you're not going to squeeze somebody that when there's not somebody with an outright naked short. Now, that's not to say that some hedge funds aren't short, because there's funds that are short and long all the time. And I say people push it around, but there is no organized effort to suppress the price. It's like people say, well, I don't believe the gold is there at the GLD. Well, why would the Gold Council, whose job it is to try to promote the usage of gold and the investment in gold, and the ETFs have done that, why would they create something that was a fraud?
It's a good answer.
It makes no sense. So, does the ETF ever use futures? Yeah, they do. But I mean, what happens is, here's what happens. And I used to do this too before I learned how you have something happens and you're sure the price of gold or silver is going to go up based on the news, and it goes down. And then it's always, oh, they made it go down because they didn't want it to go up. Well, you know what? I've watched these precious metals markets now for 30 years, and I've been involved in them for a lot of that time. The fact of the matter is sometimes you're wrong on what you think. And the market doesn't do what you thought it was going to do.
Of course.
And therefore, that's what happens. It especially happens with macro assets like gold and silver or other macro assets, because you don't know all the factors at work. I mean, maybe you thought it was supposed to go up and some hedge fund blew up and they had to puke it out. And then they hit stops and then I mean, so I'm just saying, you have to approach this with an open mind. If you start thinking that this is all happening, you're fighting the wrong enemy. The enemy is the policies that cause you to do this in the first place. And then when enough people agree with you, then you get paid. And when enough people don't agree with you, then you sit around and get frustrated.
Bill, don't you think, though, there's an awakening going on right now where people are starting to see silver and gold as a hedge against inflation? Because we rallied 47,000 people in 2 months just for that reason alone, just to wake up the masses. And you were saying a little bit earlier
I think, sorry, I don't mean to interrupt.
No.
I think that for sure. And I think the premise from what I read of the people that are really bullish on Bitcoin, which is to say all of them, if they own any, the original, a lot of their premise is the pernicious problems created by the money printing and the abuse of the fiat currency. I think that's the premise of a lot of them. It used to be blockchain, but the premise has shifted now. But that's a different topic. But and yes, I think that's true, and I think a lot. It would appear based on the people that got interested in silver, people understand that. But it's one thing to understand, okay, this is what they're doing. They're making my cost of living go up. Mm-hmm. They're telling me they want my cost of living to go up as measured by the PCE or the CPI at over 2% a year. When those stats, when they read 2, you, depending on your station in life and your wealth and your family and all that, you might be experiencing 4 or 5 or some other number. So the Fed is going to make your cost of living go up. What we don't know is how fast, and we don't know how many people are going to really get upset and try to protect themselves. Right. To the extent that the silver, that everyone, so many people jumped on silver, shows you that the people are getting the joke. And you'll be rewarded by owning silver, but you're not going to get rewarded by squeezing the shorts. When enough people decide this is what we need to do, the price, and silver is particularly spiky because it's a thin market. It really is. So it lurches. I mean, and we will get, there'll be a time when the forces will come together and it'll trade up to 28, 29 bucks, and it'll go 28, 29, 31, 32, 35, or something like that. That's its personality. My friend, who was the biggest local in the COMEX for a long time, used to say, silver's not a market, it's a personality. And it really is. So it trades in a certain way because it's a small market. And, all the gold and silver, for the most part, that have ever been found still exist. And it's why, that's how they run the futures market and things like that. A lot of silver is in religious artifacts and things like that, more so than gold. So the market cap of the available silver is far smaller than gold. And that's why it gets squirrely on the upside and squirrely on the downside. So that movie is still going to play out. It's just not going to play out for the reasons that I see cited by the short squeeze crowd.
Ivan, do you have a question for Bill?
Yeah, Bill, what are your plans? What are your plans for the next 3 to 5 years? Do you have any certain direction you want to go with investing? What are your personal goals and plans for the next 3 to 5 years?
Oh, I don't have any specific plans. I mean, I'm set up to protect myself and to try to capitalize on the shift in the psychology of one that says the central bank's got our backs and everything's going to work out just fine, Goldilocks rules, Tina rules, blah, 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 to one where, oh my God, these guys don't know what they're doing. They've created nothing but problems. They've allowed us to kick the can and not solve problems. And now we've got inflation, and they can't stop printing money because they don't want the financial markets to tank. So when we get into that movie, and at some point, then we'll have to see how that goes. Does the bond market actually take away the printing press? Do we have some kind of a reset that starts things over? Does the Fed decide to tear up all the debt that it's bought of the Treasury or swap it for some asset so the government, that debt goes away? Is Japan going to do that? I don't know. There's lots of things in the end game. That's why we started the podcast, to explore those ideas. I don't know how that's going to play out. But between here and there's going to be a change in the psychology and the perception of inflation, and precious metals will be the beneficiary. That's the reason to own them. And the risk reward, I think, is pretty attractive, particularly in some of the precious metals companies. Obviously, if you're in the gold business, you're making a lot of money now because the margin is quite substantial. If your cost of production is $1,000 an ounce or 1,200 or 900 and the price is 17, silver's sort of the same way, but there aren't that many really big liquid silver companies that you can find.
No.
But in any case, that's a different topic.
No worries, Bill. Before you go, I have a question here from the Wall Street Silver community. They're saying, Bill, what is your question, or what is your answer to the youth? Like, what is your message to the youth?
You need to understand that the Federal Reserve is not your friend. Okay. They are not here to help you. They are the single biggest driver of income inequality, the dramatic bifurcation of wealth in this country, the hollowing out of the middle class, the lack of their policies have allowed the lazy politicians to pursue, their own pork barrel politics and not deal with some of the problems that younger people ought to be concerned about. So you need to understand, you have to look at the Fed as a destructive force, not a beneficial force. I mean, the Fed the Fed says it means well, and they do mean well, but their policies don't work. Mm-hmm. They've led us to this epic bubble where rank speculation has multi-billion-dollar market caps with a lot of these companies. And you see the craziness that goes on with bankrupt companies. And I get it that young people thought they're speculating, it hurts, and all those things. The worst thing that can happen to you is you pursue a bunch of crazy strategies when you're starting out, and it works, and you learn all the wrong lessons. Mm-hmm. So I think a lot of these young speculators who showed up and were putting money, in all these ideas, and it worked, learned a lot of the bad lessons. That's not investing. That's basically just gambling. You can't win at gambling long run. You can win at investing. You can get the odds in your side. You can get the risk and reward lined up in a way so that you have a chance. But a lot of the things that I've seen go on, and for as much help as Dave Portnoy's probably given people about, hey, let's get going, saying stocks only go up has been true because of the Fed's bad policies, but it isn't true. And there will be a reckoning. And I think you need to understand that. I mean, I give credit to these people who understand what the game is, but you have to understand that sometimes you can say things that are actually silly and they work, mm-hmm. and you think that it worked, but you were doing something that was working and your reason for it was wrong, but it still worked. And you learned the wrong lesson, and that'll be painful over time.
Now, Lee, do you have your question for Bill?
I do, Bill. Just getting back to like more of a macro view of things. When do you think it's going to happen? I guess you're going to say that the bond market's going to telegraph this, but what are the signs are you looking for in terms of things changing? The market coming down, crypto crashing. Do you foresee these things happen? What's your general overview of what's happening in the markets?
Well, I think if the bond market is going to be, the canary in the coal mine, as I suggested, that's my favorite thesis. What we're going to see inflation data pick up in the course of, call it somewhere between April, May, and July, August. And we need to see what that looks like and how the markets respond. If we get into it, and you'll have to see whether psychology starts to shift, the average person, the average portfolio manager, what do they start to think? If that starts to change, and bond rates are backing up because people recognize the inflation risks. If the Fed then tries to suppress the rise in rates because rates are going higher than what they want, and they are not uncomfortable with inflation, and they try something like yield curve control, or the bond market backs up enough that the stock market breaks, and they come in with some variation of some new QE kind of a thing. Basically, if they ride to the rescue of bond rates backing up because the bond market is disturbed about inflation, that's the signal that they're losing it. And they're basically pouring gasoline on a fire. Now, bond rates, 10-year rates just rallied, rates rallied, bonds declined, yields went up from, call it 75, 80 basis points last summer to 170. Well, that didn't necessarily have to mean that the market was saying the Fed lost control or they'd gone too far. That was just sort of pricing in, okay, the economy is going to come back, and too many guys were looking for negative interest rates, and they got to get flushed, and the market has to sort itself out. So you don't always know why the market has moved. But if we get to a point where the market is distrustful of the Fed, and I've seen that in my career, I saw it in the 80s, early 80s in particular, then that will be a signal that they're losing control, and that's when the stock market could break hard. Although it's hard for the market to break because of the influence of passive investing, but anyway, in that period, things will start to change, I think, and that's when you have to pay really close attention to what's happening. That ought to be a real powerful catalyst to move precious metals quite a bit higher, I would think.
Would you argue that fundamentals only matter when mass psychology changes?
Boy, that's a really good question. To some degree, yes. I mean, the psychological component or the belief that people have matters a lot. Does it trump? Yeah, and I think it does trump fundamentals, because how else could you get these? How else could something like Tesla trade at the valuation it trades for if it wasn't for the madness of crowds? There's no amount of math that says that'll work. And I can give you 50 other or 100 or 200 other examples.
I'm sure you could, like JDS Uniphase. Anyway, we could go through lots of examples. But the crowd psychology is a big component. And that's something that's difficult to understand when you're starting out, right? I mean, but yes, so there's the fundamentals that when the fundamentals are right and the right psychology catches the right fundamentals, that's when you can get a really big move in either. I mean, you can only lose 100% on the downside, but you can get really big moves on the upside when those two come together. Well, we really appreciate your time. We hope that we can get you back on the show in a few months' time as the market changes.
Yeah, your knowledge is incredible.
Well, I got a few more minutes. You got a couple more questions, otherwise I can go.
Let's go.
Great.
Let's
keep
going. Lee, hit him with another
Definitely. One. Can we talk about the miners a little bit? We've
Sure.
interviewed a lot of junior mining companies. You've been on the board of Pan American Silver. Imagine a whole different ballgame when you get to that size of corporation in the years.
So what's sort of ironic is that when gold was when gold had its big rally from, say, the early 2000 to 2012 or 13, miners were really quite expensive, depending on how you looked at it. I mean, you could look at it as assets in the ground, and they didn't look so bad. But meanwhile, then the price of gold corrected from 1,800 to 1,200, and we had this horrible bear market in these mining companies. And the mining companies have gotten religion to a large part. I mean, a lot of them are cheap on a PE multiple basis. I mean, 10 times or less. I got a couple that one I own at 6 times, one's 9 times, one's 8 times. I mean, they're very cheap. The balance sheets are all good, the ones I'm involved with. You can find ones with great balance sheets, with their mines in safe places, run by competent management that's done well. And you get to make this bet about the things that we said. And you can buy companies if like, say, you buy New Gold, which is a company that was in big trouble and they turned it around. It's $1.50. I think they'll earn 30 cents plus or minus here today's prices. That's 5 times earnings. Yeah. There's a company called Westdome that I'm involved with that I love. The management's fantastic. They just announced a new find. They've done everything right.
Nice.
It's about a $6 stock that makes 70 cents plus or minus at this price. I could give you lots of examples of companies that are selling at really low valuations. Some of them are paying small dividends. Some are paying, like if you look at Barrick and Newmont, they're paying big dividends.
Nice.
Yeah.
Now, they have some mines in places that I don't like, and they're bigger companies. It's hard to move the needle from an exploration standpoint. I tend to prefer companies that have some ability to increase their own production via exploration, so you get some growth to go with the price increases. But if you look around, it's not difficult to put together a portfolio of really good companies and trading at fair prices where their mines are in good places.
You can't really say that about many sectors.
No, not today. No, it's shocking. These valuations are what we saw in the early 80s. I remember when you could routinely find stocks selling at 10 times earnings. It's hard to find a lot of these popular stocks selling less than 10 times revenues today.
Yeah.
But so there are a lot of them. If you spend some time looking around, you can find companies that have a fabulous risk reward profile. If the things that we're talking about start to play out, it would be no big thing for a lot of these companies, I think, to go up 3, 4, 5-fold if we really saw a big move in the metals. And I think the downside in them is pretty much been squeezed out.
Sure. Do you have any one last question for Bill?
Yeah, Bill, are you currently, like, have you seen, where did you hear Wall Street Silver from? I'm very curious.
I can't say exactly where I did. I mean, I think I probably saw it referenced on Twitter somewhere or in a news article, but that I think that's probably where I would have had to have heard of it.
Nice. Well, we appreciate you, Bill, from the Wall Street Silver community. The insight that you just gave us is huge, because a lot of the people in our community are so like exactly what you were saying. The second they see any type of price manipulation, boom, they'll jump on some type of bullion bank or whatever.
Yeah.
But it's good that you brought that type of insight to us, because you've been 30 years in the industry. So it's good to have that type of knowledge and insight. So I
think knowing the true nature of the enemy you're up against, i.e. the market, or other people not believing what you believe, at least keeps your energy focused in the right direction instead of bitching about something that's not true.
That's right. Well, we appreciate you a lot, Bill. What was that website again?
Fleckensteincapital.com.
Fleckensteincapital.com. Awesome. Well, we appreciate
I'm on Twitter. I got a Twitter handle. It's @FleckCap. Although I don't say that much that often, but
that's okay. We'll put it in the links.
We'll wait for it.
Yeah. We'll put it in the links. Well, we appreciate you, Bill. Hope you have a really, really great day, and thank you everyone from the community for watching us.
My pleasure.
So much.
I hope it was helpful.
Of course. All right.
Absolutely.
All right. Bye-bye.